Thanks everybody for joining us tonight. Really appreciate it. For our first time home buyers home seminar, or a webinar, I should call it. We're going to go over some great info today. Let me just start off by telling you a little bit about our real estate team. So we're the Damon Realty Group. We service the areas of Oakville, Burlington, and Hamilton. And we've actually been working these markets for over 15 years. We're partnered with Keller Williams. Our team belongs to a brokerage, Keller Williams, and yeah, that's where we run and operate our business out of. We've got 9 team members in total to be able to assist you with whatever your needs may be, whether it's buying commercial, investment, renting, purchasing your first home, and anything in between. And our team really puts a big emphasis on customer service and education. So our number one goal is to make sure that all of our clients understand the process as close as we can get them to understanding it just like we do. And we're really lucky today to be able to be joined by Craig, one of our in-house mortgage partners, who's going to be able to walk everybody through the ins and outs of getting pre-approved as a first-time home buyer and what this process looks like. Craig, why don't you take us to the next slide here and jump in?
Beautiful. Yeah. So my name is Craig Austin. I'm part of Dominion Lending Centers. Work very closely with the Damon Realty Group, and very happy to be here. So we're going to talk about who this webinar is for right off the bat. So this webinar is positioned to be talking towards the first-time home buyers. There are takeaways for people that are, maybe exited the market a couple of years ago. They want to re-enter the market. Maybe you're looking to sell and downsize or upgrade. So there is a little bit of things for everybody in here, but we're going to tailor this more towards the first-time home buyer and common errors that we see, or things that are kind of not done during the buying process. So we're going to talk about that. But who is this webinar for? Well, if you're currently renting but looking to purchase your first home, if you have savings or access to funds for a down payment, if you have a good credit score or an excellent credit score, even better, this presentation is for you. If you have consistent employment, and what I mean by about that is if you have salaried employee or employment, if you are an hourly employee with guaranteed hours, even if you're self-employed and you're paying yourself a healthy income, this presentation is for you. Maybe you'd like some help with your budgeting, understanding your numbers. This presentation, we're going to go a deep dive into our actual budgeting that we do for all of our clients. And then if you're tired of paying your landlord's mortgage, and you want to start building your own equity and take pride in your own pride of home ownership, this presentation is for you. Okay, so we're going to jump right on in. This is called 10 rookie mistakes and how to avoid them. Nick, why don't you start us off?
Sure. So one of the most important things I always tell people is have the right team put together to be able to assist you throughout this process. Like we mentioned before, we've been doing this for about 15 years, and we've worked with, hundreds of people in different avenues of this transaction process, mortgage brokers, solicitors. Obviously, we've come into contact with a lot of real estate agents. And one thing that I can say for certain is that no two people are exactly alike. There's some people who perform these services at an extremely high level, which are the exact type of people that we're trying to source out. And then there's other that perform at a very low level. So it's just one of these things. You really need to make sure you're on top of it. Just for an example, I had a client of mine walk into a bank, and you know how you can walk into any major bank and, tell them that you want a mortgage. So these people went in there, they wanted to, work with their own person who they've been in contact with, and that's totally fine with us. If you have your own circle that you trust, that's great. So they went ahead and did that. And then we actually found out 3 days before closing that their representative forgot to submit their file for review. So they actually didn't have a mortgage in place at all. And we found out 3 days before closing. Anyways, that's the type of situations that we can guarantee will never happen when you're working with us. We spent a lot of time vetting and making sure that everybody involved throughout our process is doing what they can at the highest possible level that these industries have to offer.
Yeah, for sure.
Which brings us into the next point about not being pre-approved the right way. So I'm sure you have some things you can talk about there, Craig.
Absolutely, yeah. So number 2, not being pre-approved the right way. So what does that exactly mean? So when you're thinking about buying a home, the first step you should take is getting pre-approved for a mortgage. And this is really when lenders take a look at your entire financial picture. They look at your income, they look at your credit score, they look at your debt levels to see how much they're willing to lend you. So it's an important first step because it helps you figure out your budget and shows the sellers that you're an actual serious buyer. So you may have heard of terms like pre-approval or pre-qualification before, but there is a difference between the two, okay? So a pre-qualification is just a rough estimate of how much you might be able to borrow, but it's not based on verified information and might not meet specific lender guidelines. A true pre-approval is when a lender looks at all of your information, your income, reviews your credit, reviews the amount of money that you have available to cover the down payment and closing costs, and they've determined a max amount of what you can borrow from them. And so I'll give you a quick example of a pre-qualification, how it went wrong. So I had a client that went to one of the big 6 banks last year. This is back in early 2022. They were pre-qualified. They went into one of those 2-minute get pre-qualified in 2 minutes at one of the big banks, entered their information, and they were given this little piece of paper saying that they qualified for X amount of dollars. But since it wasn't a true pre-approval, they didn't collect all the documents, they didn't run the credit. And what ended up happening was one of the applicants on the file was technically a contracted employee who was technically considered a self-employed individual. And the pre-qualification, the questions asked did not pick that up. And unfortunately, because when they went and bought a property, when they brought it back to that bank, that institute, they declined the mortgage because she technically needed a 2-year average of her self-employed income to qualify for her income. So had she gotten a pre-approval up front, we would have been able to advise her that unfortunately we can't use your income as it is right now because there's just not enough history on a self-employed income. So there are all these different nuances about how to properly get pre-approved. And so in a competitive market, having a true pre-approval gives you an edge over other buyers, and it can make the home buying process a lot smoother. Plus, with the pre-approval, you're able to secure an interest rate. We can hold your rate for up to 120 days, which protects you against rising interest rates. So again, before you start buying, shopping or house hunting, speak to a mortgage professional like myself and make sure you get a true pre-approval. It's a simple process. It doesn't cost you anything. I have access to dozens of different lenders, which enables us to offer our clients a lot more choice. So we can kind of shop you around to different banks, okay?
Yeah, that's really helpful. Thanks a lot, Craig.
For sure. And so let's talk about number 3, which is kind of ties into this about our pre-approval process, not understanding your monthly budget and your closing costs. So let's talk about the budgeting that we do for all of our clients. Part of getting pre-approved with the Damon Realty Group is our process is that we create custom budget spreadsheets, which enables us to break down all of the closing costs associated with the buying process. We show you what you qualify for. We break down your monthly household budget. So you have a very clear picture of all of the numbers laid out in a nice clear package. And now we know exactly what you're all in on a monthly basis. The benefit of this is it acts like a blueprint for you and your realtor. So as you go shopping with Nick and his team, they know to send me the MLS listings of properties of interest. I plug those numbers into those budgets, not only to make sure that you qualify for those specific properties, but also that you can see down to the dollar what you qualify for. So we get a lot of positive feedback from our clients because it gives them all of the numbers laid out in a very clear and concise package. And so let me show you what I mean. I'm just going to quickly.
Yeah, and I can actually just say that our clients who have experienced this with Craig really, really appreciate it. It just takes your level of understanding your budget to a whole other level, and it just everybody's on the same page, and all of your questions on affordability are going to be answered when you get to go through this with Craig.
Yeah, and our pre-approval process is pretty simple. It's a 15-minute call with me. There's a mortgage application that takes about 6 to 8 minutes to complete. And then there'll be some documents to verify your income because it is important to have that information so we can get you a true pre-approval. And then once I have that information, I can turn around your pre-approval within 24 hours. And one of the things we do is we make you a budget that you're looking at. This is just an example, obviously. And then I'll make you a video walking you through the budget. So you have a very clear understanding of all the mortgage terminology. And so basically, this is a client that came, they had about $80,000 all in to cover the down payment and closing costs. After we ran the numbers based on their income and their debt levels and all of that, they qualified for essentially a $700,000 property with 10% down. So the level of analysis here is, we were basing this budget off of a 5-year fixed interest rate term. We talk about the amortization period. We talk about their interest rate, which at the current time was around 4.79%. Mortgage default insurance, we factor all of that in. So you're not blindsided by those numbers. Property taxes. So this client qualified for a $700,000 purchase price amount with 10% down, that's $70,000. This $19,000 is that mortgage default insurance. We'll talk about that more offline, but that gets rolled into your mortgage. So this client basically qualified for a $650,000 mortgage amount. Now, in the second section here is we break down all of the closing costs. So we factor in the down payment of $70,000. We factor in legal fees, HST on those legal fees, the land transfer tax. In this case, this person was a first-time home buyer. So their land transfer tax rebate is factored into these budgets. So these budgets do factor in your rebates. We've got tax on the mortgage default insurance. We've got $1,000 buffer we put in there. So these clients were all in for just under $81,000, which is what they had available to cover the down payment and closing costs. So we knew they qualified. And then taking it one step further, we break down their monthly household budget. So at the interest rate we currently had at that time, at a $650,000 mortgage amount, these clients were all in for $3,700 a month. Factoring in property taxes of $3,000 a year, they were in for $250 a month. So these clients were all in for $3,950. So again, now they can go shopping for properties that fit these parameters, but also they know how much it's going to cost them. So they're not blindsided about, variable costs after the fact. And so this has been very helpful and have made more confident buyers, we found. So going back to the presentation, so that's essentially understanding the budget and the level of analysis that we do for that. Okay, so going to the next point, Nick.
Yes, the financing condition. Interesting with the way the market has shifted back recently, we're seeing a lot of conditions in offers now. I mean, there was a long stretch of time where everyone was going in firm with no condition. And that was extremely risky. So I personally, I actually like things a little more balanced this way so that people are able to protect themselves. Now, the financing condition is one of sort of the major conditions that we're going to see. We generally see home inspection financing condition on most deals that are coming across our desk at this time in the market. And one of the reasons that we put it in is we want to make sure that Craig will have additional time to really, just double check everything to make sure that the financing is going to make sense and that we're not going to have any hiccups. This is generally the time when we'll actually be able to submit an actual deal for Craig to review. And Craig, I'd actually love it if you could speak to a little bit about when you receive a deal with a financing condition, what exactly happens on your end of that?
Yeah. So basically, once you have an accepted offer from your offer, you've bought a property, we have a window of time. So typically it's a 5-day window. It can be shorter, it can be longer. It depends on the conversation we have and what type of market we're in and where the property is located.
3 to 5 business days in this market normally.
Exactly. So in this case, I get the file back. Let's say it's a 3-day financing condition. I submit that file in right away to the lender. And that essentially gives us 3 days for the lender to come back, give us our final firm approval. And at that time, once we have it, you guys can go waive that financing condition in the event. So here's another reason why getting pre-approved is so important, that one, the answers. We know the lender's guidelines. You've been pre-approved for a mortgage. The banks, look at it this way. The banks love you as a client based on your pre-approval. They don't necessarily know the property that you're buying, and they don't review anything until there's an actual property live. And so once they've got the offer in hand, they review your income again, all that stuff. But now they look at the property. And so, if you bought a property that was a former, grow op or next to a nuclear power plant, they always have the choice whether or not to fund on that or not, right? And so, again, we have access to many different lenders that we can shop that around to. But just because you're pre-approved doesn't guarantee that the lender is going to lend on a specific property. They're always going to do their due diligence. If the property is run down, they can decide to decline it just because they don't want to take on the risk. Okay, so. Yeah,
and that's one that I've seen actually quite a bit. If you get an MLS listing that says handyman special or sold as is, or, great future project, stuff like this is a turn off in a way to banks, and they could decline the file even though you're pre-approved, and they look at that particular property being attached to your file as being high risk, and they may end up declining it.
Yeah. And in the last couple of years, the market was so hot that a lot of people were going in with no financing condition at all. And so again, going back to knowing your numbers, talking to a licensed mortgage professional that knows that, ultimately the choice to waive the financing condition is up to the client. We're going to guide you as far as we can go. And we can, based on the experience that we have, we can advise you that, yes, you most likely have no issues. There's always a risk depending on the property that you buy. So again, never wing it. Always know your numbers. Always get a firm pre-approval from a bank or a mortgage provider. and you'll have a lot more confidence if you do decide that you have to waive the financing condition if you are in a very heavy competitive market. But like as Nick was saying, we are seeing that a lot more conditions are being brought back in just because the market has cooled off a bit.
Now, Craig, I'm really excited about this next slide, actually, because I get this a lot. And back earlier in my real estate career, there was a lot of people who, and now obviously doing it time and time again, we know to prepare people for this, but yeah, a lot of people don't know the difference between a deposit and a down payment. And if we go out and you're pre-approved and you're going to go out and buy a house tonight, if you end up purchasing a house, you're going to be required within 24 hours. Typically, there's a few different ways you can set it up, but the typical one is called upon acceptance, which is 24 hours to deliver a deposit, which is typically between 3 and 5% of the purchase price. And this deposit is separate from the down payment with your bank, but is counted towards the same grouping. Craig, why don't you dive into?
Yeah, for sure. You pretty much nailed it. But yeah, there are a couple of different types of payments that you'll need to think about when purchasing a home. First, there's the deposit. So this is the amount that you'll pay right after your offer on a house is accepted. Typically, it's due within 24 hours of an accepted offer, and it's a small percentage of the overall value of the home, which Nick just indicated was 2 to 3%. The most important thing to keep in mind is that deposit money needs to be available in liquids. So you want to make sure that you have, discuss that amount with Nick and his team prior to submitting your offer, and that you have that money accessible and on hand. So you and your realtor will discuss the appropriate amount to offer as a deposit in order to make your offer competitive. And as I mentioned, that deposit is due within 24 hours on an accepted offer, and that goes towards your down payment. So giving you an example, if the money's in a GIC, or if it's in an RRSP, or if it's in a stock, bond, mutual fund, something like that, where it's going to take a couple of days for you to withdraw that money in order to hit your bank account, you're going to want to do that preemptively in order to have that deposit money. Alternatively, you could, if you have a personal line of credit, if you have some way to, people have done it in the past, they've done like a cash advance on their credit card. I don't necessarily recommend that because you're going to pay on interest on that right from the second you withdraw it. But there are ways to find the money, I suppose. But you want to have the money available, if possible, liquid, so you can put the deposit on right away. And then if you do have to use a personal line of credit or some kind of line of credit or a credit card, for instance, you'll just transfer the money from, your GIC or your RSP to pay off that line of credit before you close. And so there are workarounds, but I guess the message here is have your money available, some aspect of the money available liquid that you can then use as a deposit. As I mentioned, the deposit will go towards the remaining balance of your down payment and closing costs. So that's the next big payment that you'll need to think about. This is the down payment specifically. This is the remaining amount of money that you'll need to put down on the house to make it yours. The down payment is usually a percentage of the total purchase price. And remember, the deposit goes towards whatever you put. So let's actually give you an example on the budget. Okay, so let's go back to the clients that were approved for 700,000. Right? You'll see before they put a deposit. I'm just going to highlight it here in green. They haven't bought a house yet, but now let's just say they bought a house, and right now they're in for $81,000 down here on row 29 here. Let's just say that deposit you put down is $20,000. So you give that $20,000 check. It's held in trust at the seller's lawyer until you close on the property. But that $20,000 now reduces your total closing costs, your down payment and closing costs by $20,000. So now that $80,000 went down to $60,000, right? So once you have a firm offer, we'll update the budget accordingly, and you'll know exactly what you could. Now, essentially what happens is you'll meet with your lawyer typically a week before your closing, and they'll give you a thing called a statement of adjustments, which basically outlines all of these different closing costs you're seeing here. Land transfer tax, legal fees, all these different costs. And they're going to provide you with a statement of adjustments, and it's going to show basically this amount, 60,000. We're typically within a $500 of that number. So anyways, that's just an example of how the down payment factors in.
And it's not going to be a surprise because they'll have went over it already.
Exactly. And before we actually submit the file into the lender, once you've got an accepted offer, we'll jump on a quick 15-minute strategy call just to review everything. We review interest rates, variable rate options, fixed rate options, different term limits. So 1, 2, 3, 4, 5, 7, or 10. We'll go over all of that stuff. And so you make an educated decision. You said, yep, we're ready to pull the trigger. And then we submit it in. So you're always in the know, and the budget definitely acts as a blueprint.
Very good.
All right. Okay.
That's great.
So not taking advantage, number 6, not taking advantage of the programs and first-time home buyers. So there are a few programs available. The big one is the first-time home buyers plan, which basically gives you access to up to $35,000 from your RRSP that you can use to put towards the down payment and closing costs. And it gives you it gives you 15 years after you've taken it to put it, to pay it back. So you can make installment payments over the additional 15 years to pay it off without being taxed on withdrawing it, okay? Quick tip for people that are watching this, we are in tax season right now. One thing to note is the RSP, so if you were to just drop $35,000 in your RSP tomorrow, it has to sit in a registered RSP account for a minimum of 90 days before you can withdraw it to put towards the down payment and closing costs. So very important that you keep that in mind. Another thing that we're doing, that we're seeing clients, we recommend clients do, if they're looking to increase the amount of down payment they have, what they can do is, if they have contribution room. So let's just give an example. Say you had $20,000 sitting in your RSP and you had another $15,000 sitting in a savings account, but you were going to use all of that money to put towards the down payment and closing costs of a new property. In this time frame, because we're pushing up against tax season, April 30th is when we have to have our personal taxes done for the government. What you could do, you have $20,000 in your RSP room, and assuming you've got contribution room to get you up to that $35,000, what you could do is drop that additional savings that you have sitting in your savings account or wherever it is, drop that into your RSP account. And what's that going to do is that it's going to, one, maximize your RSP account, right? $35,000 is what we can use, so it's maxed that out. But now that you've put that into your RSP account, you're going to go do your taxes. You're going to get a nice chunk of change back from your accountant, depending on your tax bracket, because you've deposited so much in your money in your RSP. So now you can use the $35,000 from your RSP. You can use the money that came from your return, and now you've got a higher down payment that you can put towards the down payment and closing costs, which is going to increase the amount you qualify for. So that's just one of those like little hacks that people do at this time of year to increase the money that they have available for their down payment. Hopefully that was clear. The other one's the land transfer tax. So first-time home buyers, based on the price point of your house, typically it's about a $4,000 rebate off of the land transfer tax. So if we go back, I'm going to show you that going back to the budget. Hopefully you guys can see how useful this budget actually is. So in this budget, I'm going to highlight here in green. I'll do actually a blue color. This first-time home buyer is a toggle. If you're not a first-time home buyer, and I'm going to highlight the land transfer tax down here in the same color, that funky blue. If you're not a first-time home buyer, this jumps up by $4,000. So this budget does factor in your first-time home buyer. These people were first-time home buyers, so it factors in it. It reduces your land transfer tax by $4,000. Okay, so that's a first-time home buyer rebate that you're available. And again, the fact that working with the Damon Realty team, myself, the level of analysis that we do, we walk you through all of the options available to first-time home buyers, and so you don't have to worry about, are you missing something? We've got you covered. Okay. Nick, anything else on that?
No, that was great, Greg.
Okay.
That was perfect.
All right, Nick, go for this one.
Oh yes, trying to time the market. I can definitely speak a little bit to this one.
Yep.
So having been doing this for as long as I have, we always get certain people that we run into who they want to buy at the absolute lowest time and sell at the peak. And I'll be honest with you, so does everybody else. It's just and the reality of the situation is nobody has a crystal ball. We can't tell exactly what the market's going to do. There's a lot of external factors at play, and it's just very hard to gauge exactly what's going to happen. To be honest with you, nobody knows for sure exactly what's going to happen with the market, and there's a lot of outside things that can happen which will change sort of what people are thinking, the direction it'll go. So just as an example, back when the market was really busy, there was people who were waiting for the market to drop, and it just went so high that they'll never be able to, unless something really dramatic changes in their lifetime, they'll never be able to afford. So they're priced right out, and it went so far past what their budgets were that it's very unlikely that it's going to go back down there again. And if you look at actually a chart from about 1972 or 1975 to the current date, it really tells a tale in its own. There are times when the market goes down. It does, like we're in one of these periods right now. We're a little bit down from the all-time high, but when you take a step back and you analyze things on a bigger scale, One thing that you'll notice is the trend line for real estate is always going up. And there's just the tale of as old as time here is we've just got not enough houses. And even in this market where the rates are really high and everyone's thinking the market's supposed to be crashing, there's still not enough homes to support everything. And prices are holding strong even right now. So I think it's really important just to try to, especially for your first property, like you're just trying to get your foot in the door, and don't put yourself into a situation where you are relying on flipping the property within a year or a short period of time. You're putting too much pressure on yourself. Set yourself up in a situation where you need a place to live anyway. You might as well be paying your own mortgage versus rent. Get into a property, a condo, whatever you can get into first and afford. Enjoy it, live your life there, and then revisit it in a few years when you're ready to potentially upgrade the home. And you can take all the money that you put into that property, plus the equity that it's come up. And the longer you wait, the more likely it is that you'll be gaining additional equity on that property. So, and that's how people really move up in the real estate world. They don't go and buy the Taj Mahal for their first property. They'll buy many properties between their first property and that end result, and to use as stepping stones to get to where they want to be.
100%. Yeah, the property values in the Greater Toronto Area, Hamilton region have appreciated at 7.4% over the last 35 years. And so, yeah, there's ebbs and flows, but if you look at a chart, it goes in one direction. And so
it does.
This is how people are creating wealth in real estate. And I'll just add to your point there, Nick, there's over 500,000 new Canadians that are pegged to come to Canada over the next number of years, every year for the next number of years. And in Ontario, we have a huge supply and demand issue. They're incentivizing people downtown Toronto to turn their alleyway garages into residential properties, apartments. They're talking about developing the green belt right now because there's not enough land to, or there's definitely enough land, but for whatever reason, they're deciding to talk about the green belt. Point being is that we have a huge influx of new Canadians coming and we don't have anywhere to put them. And so half of those 500,000 new Canadians that come to Canada typically migrate to the Greater Toronto Area. And so we have a huge supply and demand issue, and that's going to drive prices, continue to drive them going up. So now is just as good a time as any to start looking at real estate for sure.
Absolutely.
All right. Okay, so knowing the difference between a mortgage broker and a bank, and so I've laid them out here for you. So we work out with you, we work for you and not your bank. So essentially, we have access to dozens and dozens of different lenders. It's our job to really kind of put you in front of as many different lenders to kind of have them fight for your mortgage, to get you the best interest rates, to get you, the best mortgage product that best fits your needs. The second point is having your best interests in mind. Typically the banks have shareholders' interests in mind. They're trying to increase revenues every year. We're more focused on year-end goals, maximizing your tax strategies, annual reviews, life changes. And so we monitor your mortgage throughout the entire term of your mortgage. So if there are ways to save you money and optimize your mortgage, we present those for you as well. One point of contact, there's turnovers in the bank. For me, I'm a relatively young guy, I guess. I don't know. I'm not going anywhere for the long time. So you have one point of contact, you pick up the phone. I'm very available on the weekends, after hours. And so our communication commitment, being able to there for our clients is very important to us. We run a very white glove concierge. I know the Damon Group is the same, and, very hands-on, kind of hold your hand all the way through the buying process and then beyond. We don't, we stay with you to make sure that you're, in my case, your mortgage is being fully optimized throughout the entire term. So when we get rate specials along the way, and if it makes sense to break your mortgage and get you into a lower interest rate to save you money over the remaining term, we'll present those options to you as well. We have access to lenders that you don't have access to. So we have access to the big banks. We also have access to many different A lenders that all they do is mortgages, credit unions, private lending. And so we have basically, a whole over 70 different lenders that we can kind of put this out to the world to. Again, protect you and your family. Obviously, when you're planning for a big purchase like a home, preparing for tax strategies, making sure you're optimizing things so you're saving as much money as possible. We run you through those as well. And then I guess the best thing about it is I don't charge you a set for my services. We get compensated by the lender after your mortgage is funded. So there's no hidden costs. There's no charge to use our services. So that's, I guess, the sounds very self-serving when I say it like that, but there's a lot of benefits of working with a mortgage broker versus the bank, just because we have a lot more options and we're a lot more available to your needs. So,
Great.
all right. Number 9, this is kind of like the holy grail of what not to do when you've got when you've bought a house and you've got the approval back. So let's just kind of quickly go through these. Don't go make large purchases. So avoid making purchases like cars, big furniture, that can affect your debt to income ratio, which means basically your qualifying ratio. So here's a kind of a fun fact for people that if you were to go get a mortgage tomorrow and got it approved, and then you go buy a car next week and it comes with a $400 a month car payment, well, a $400 a month car payment basically wipes off $100,000 worth of borrowing power. So if you were at the very top level of what you qualified for, there's a very big chance that the lender, if they pull your credit again, will pull your mortgage away. So don't make big purchases. The next thing is don't change jobs. You've been approved on the income that you're currently making. If you do change jobs, it could create the lender could pull their approval from you. Always very important that when you are considering changing jobs, which I don't recommend, but if you are doing it during the process, one, you want a job that is going to offer you the same income, if not greater. The other thing to note that typically you have to be off probation before you can close on a property. So if you're taking that new job and maybe it comes with a $20,000 higher income, but you're on probation for 3 months, a lot of lenders won't allow you to close on that property until you're off probation. So just be aware of that it's not always the best choice to take a higher paying job during a home purchase if you're in the middle of it, for sure. Don't open new credit lines. So another misconception is if I open new credit lines, how does that affect it if I'm not actually using the credit? Well, it's affecting your credit score. And if you have a lower credit score, it could push you below where the lenders want to see you. Don't miss any payments. Again, the easiest way to crater your credit score or hurt your credit score is to stop making payments. So you definitely want to be on top of all of your payments during the process. Don't close any credit cards. That's another one. Whereas, your histories, your longest credit card you've had since, forever, that's your longest credit history that you have. If you go and close that credit card, then that history component of it goes away and your credit score could take a dive based on that. So it's best not to open or close any credit cards or lines of credit during the home buying process. Don't make any changes to your savings. So if you're coming to the table with $100,000 or $50,000 or whatever that number is, be cognizant of that. You need that money to close on the property if we're budgeting on that. So don't go and make a big purchase where you're taking away from the money that you need to close on the property. And then finally, this is a big one that people don't know about. Don't co-sign for anything. Don't co-sign on someone's house. Don't co-sign on a car. All of those things will show up on your credit bureau. And if you're trying to qualify for a mortgage, regardless of whether or not you're making the payment, it's going to show up in your credit bureau. And if you're at the top level of what you qualify for, it could push you outside and you won't be able to qualify. So again, be very cognizant of that as well. So that is the 10 commandments or whatever it was, 7 commandments of not to do.
That's a great point there. And I love fancy cars as much as the next person does. But
yeah.
If you're a client working with us, and please don't be sending me a picture of your new car a week before.
Go buy the Lamborghini the day after you close on your property. We don't care what you do as far as buy the cars. You go buy a really nice car the day after you close on the property. You've probably earned it, but just don't do it the day before.
Good advice.
All right. And then finally, not budgeting the soft costs. Again, we go over this in our budgets. We do very high level. We talk about housing expenses on our budgets, but when you're buying a home, we also want to factor this. This is more of a conversation we talk offline, and then we can add them to the budgets later on. But when you're buying a home, it's important to budget for these soft costs beyond just the mortgage payment and the property taxes and potentially the condo fees. So the one I want to talk about is home insurance. So it's a requirement with most mortgage lenders and provides protection for your home, your belongings, just in case of loss or damage. The cost of home insurance can vary based on a number of factors: location, size of your home, the value of your home, the belongings that you have, and the type of coverage you have. So this is going to be something that's probably required, something you're going to want to budget for. Just general maintenance to your home is the next one. Basically, regular maintenance. You might need a new furnace or maintenance of the furnace, maintenance of the AC unit, roof repair, new appliances. So just, you want to start budgeting that into your monthly costs as well. Obviously, there's utility costs, so electricity, water, gas, internet, cell phone, things like that. Those can add up pretty quickly. So it's important to consider those costs when you're budgeting for a home. Decorating, furnishing, those can be an expensive or significant expense at times, especially when you first buy a property, if you're looking to do any changes. So it's just important to obviously budget for those, keep some money back if you need to budget for those expenses. Property taxes, we do factor into the budget, so there should be no surprises there. We budget them in on a monthly basis. So we take the annual property taxes and divide it by 12, and that's essentially what your monthly cost is. Typically with most municipalities, they come in quarterly payments. Sometimes it's 6 times a year, sometimes it's 4 times a year. In some municipalities, it's once a year. And so we just break it down by the monthly expense, just so people like to know what their monthly expenses are. That's the way we break it down. So I guess where I'm going with this, it's important to remember that these costs can vary greatly depending on the factors such as location, the size of your home, energy efficiency, personal preferences, all these different things factor in. So it's important to carefully consider all of these soft costs when creating a budget for your new home, which good news for you is the budget's already done for you. We can just add to that as you go along. So there are the 10 mistakes that we see a lot of first-time home buyers make. And now we're just going to open it up to any questions that people may have.
Here's one. Can you start looking at properties before you're pre-approved? So, Craig, do you mind if I take that one?
Absolutely.
Yeah, so you absolutely can on your own time if you want to be going through open houses or driving around neighborhoods. Our real estate team, one of the first things that we do before taking people out on an actual tour of properties is we make sure that they do have a pre-approval. And one of the main reasons for that is there's nothing worse than finding the home of your dreams and then being gutted, realizing that you could never afford it in the first place, especially if you're a serious buyer and you're actually going out there with intention to try and, find things that check your list in a home. And so that would be the answer is yes, if you're going to be doing open houses and stuff like that. But if you're going to be going out with a realtor with the intention of seriously searching for a home, I would 100% be getting pre-approved before you go out on that journey.
And sometimes you have to act fast on a property. So if you haven't gotten pre-approved yet and knowing in the back of your head that you should do it, but you haven't done it yet, if they're accepting offers the next day, you have to act fast to make sure that you can qualify for this property. So just having that pre-approval ready to go, it's just peace of mind knowing that you're ready. You can make a quick offer and move on your feet when properties come up and you want to put an offer in. So it's a great question.
Yeah. Now, Craig, I think that you touched on this one during the presentation, but another one just came up is, sorry, are you able to see from the chat there what it was?
No, why don't you let me know what it is? Oh, give me a second. Okay. Oh, can you guarantee, is a pre-approval guarantee? No, it is not. So it's never a guarantee. A pre-approval essentially basically says that we've reviewed your income documents, we've reviewed your down payment, we've looked at your credit, everything looks great. But in the lender's eyes, and I'm sure you can appreciate, they get a lot of mortgage applications coming every single day. And so they just don't have the manpower to go through them all. So they don't review any property information until there's a live file. And so like when I said earlier is that, you may look great in the eyes of the lender. However, if you're buying a property that has, been flagged for whatever reason, they do have the wherewithal just to say no. Yeah. Fortunately, we have a lot of lenders to work with, but we can push it to different avenues. But again, it's always good to get pre-approved, but it's not a guarantee.
And one thing that Craig can actually do that has helped us win a lot of listings in situations where the sellers may have had more than one option is Craig can actually do a letter of approval for a specific property as well. So if you have a property that you've been eyeballing, particularly one thing that the sellers and the listing agents love to see is a written commitment from a mortgage professional like Craig surrounding a specific property outlined in the letter.
Yeah, we customize it to the property. And then we also make a video basically with just me advising them that there's no issues qualifying for the property. So you can actually add that to your ammo as well. Just another layer of confidence knowing that you're going to be pre-approved, but also from a seller's perspective, accepting your offer, knowing that, these guys have done their due diligence. They're good to go. So
yeah, as a listing agent myself, I can say that is 100% something that's going to help the buyer's file for sure.
Yeah. Okay. Another question. My parents are willing to give me money towards my purchase. Will that help? Absolutely, that will help. We're seeing a lot with first-time homebuyers, whether that be a gift from mom and dad or a co-signing from mom and dad or a combination of both. Absolutely, you increase your down payment. You're obviously qualified for that much more. And we're seeing a lot of that. The bank of mom and dad coming into gift amounts can come from your immediate family, parents, grandparents, and siblings. If you've got a second cousin removed, it's going to be a little trickier to get that approved. They typically have to come through immediate family, so parents, grandparents, and siblings. The other thing people ask me, is there going to be a gift letter signed? Yes, you will need a gift letter signed. We will present that gift letter to you. We'll fill out the information. We'll send it to you to get signed. And so we cross that bridge when that comes.
And don't be afraid to ask for help. We're in one of the most expensive real estate markets in the world.
Yep.
Things are expensive. If you have to ask for some help from a family member or whoever to help get your foot in the door, do it. It's going to change your life once you get in there. So
yeah,
take that opportunity if it's given to you.
Yeah, don't be too proud. There's also strategies that we can implement that, you know, you own a property for 5 years, you know, at the end of the 5-year term, you could refinance that property and pay back the bank of mom and dad if you so chose to. So, I mean, it's a gift ultimately, and that's not the objective there. But if, you know, if you are wanting to make it right or, you know, pay back whoever gifted you that money, the way the market has gone will continue to go. You'll have the option. By that point, you'll be probably making more money. And so you may qualify to be able to refinance your property, take out some money, you can pay them back if that's important to you. So there's lots of options to pay that gift back if you decided to.
Great. And did you see that last one come through? I didn't quite see it.
Second. Can I make an offer on more than one property at the same time?
Oh, do you mind if I
go for it? Yeah.
Definitely not, unless you can afford to own 2 properties at the same time.
Yeah.
So yes, definitely. The issue with that is if you do make 2 offers and both of them get accepted, I mean, not for everybody, but some people that would be fine. But for most people, they're only pre-approved for 1 property. So if 2 offers get accepted, you're going to have to buy 2 properties. And if you can't close on one of them, you're going to get sued. So my recommendation would be no, unless you're specifically pre-approved to buy 2 properties.
Yeah, you're going to get sued and you're going to lose. Yeah. If you're obligated, if you don't have a financing condition, you are going to be obligated to close on both of those properties. And if you can't afford to do so, you will be sued. And
and we're going to be doing a whole other webinar with a lawyer as well at some point, and he'll be happy to dive really deep into that with you.
Yeah,
and why it's a bad idea.
For sure. I think we got another question there, Nick. What happens between the time my offer is accepted and closing? I will, from a mortgage perspective, I can kind of chime in.
Yeah, I think you can take this one.
Yeah, for sure. Really... So let's just play out the scenario. You guys go buy a house tomorrow. You got the accepted offer. You send it to me. We'll jump on a quick 15-minute strategy call, review all your options as far as interest rates, variable, fixed, all of that jazz. We submit it into the lender. We typically get the approval back within 48, 72 hours, within a few days. Once we get the approval back, we'll put a complete mortgage package together. It's a signing package. It comes in the form of DocuSign. We make you a video walking you down the signing package of what you're signing. We can jump on a call to review, or a Zoom call to review all of that as well. There's going to be some conditions like appraisal potentially, some other documents like a photo ID, void check, your lawyer's information. We populate all that stuff for you. So it's like a checklist. Once you've satisfied all the conditions with the lender, that's considered broker complete. Your file will then get transferred to your lawyer. And then typically you meet with your lawyer within a week or 2 before your closing date. We work with your lawyer to make sure they have all the information they have. We got all your information on file. You meet with your lawyer about a week to 2 weeks before your closing date. They'll give you a thing called a statement of adjustments, which basically outlines all of your closing costs. And that is the amount that you're going to have to cut a check for, a money order or a wire transfer to the lawyer to close on that property. And then on the day of your closing, and maybe Nick can correct me if I'm wrong, but a lot of them are leaving. Well, Nick, what happens on the day of closing from picking up the keys and all that?
Yeah, it's completely handled by the lawyers. So we are, sort of on the back lines of that. So on the day of closing, the lawyers are going to transfer all the funds officially. The keys are going to get picked up. All the money is going to move, shift accounts. And once all the funds have been cleared in the lawyer's trust account, the keys will be released and then you move in. We usually recommend doing a final walkthrough, like with a video, the second that you take possession, just to make sure that everything as you expect it to be. And then you can go enjoy your new home.
That's a good idea.
Yep.
Okay.
Any more questions? Okay, so here's one more. Should I research neighborhoods before looking at homes? Absolutely. So we are big believers in trying to have our clients as educated as they can possibly be. If there's particular neighborhoods that you're interested in, we highly recommend taking a drive through each of the streets personally. And as you're doing that, actually, if you see any particular homes that you like and are interested in, and that neighborhood is selling within your pre-approval budget, my team members and myself are happy to go and actually knock on some doors for you and see if the homeowners are interested in selling. It's one of the services that we offer for our clients. And I also wanted to mention, because Craig brought this up, it also does not cost you a penny to work with one of our buyer agents. The services are paid 100% by the sellers. So it is a free service to gain all of this knowledge and all of this experience to have your back throughout the whole process. That being said, I don't see any more questions here. So I just wanted to thank everybody so much for coming out and enjoying this educational session with us. If you're looking to book a discovery call with Craig, we're going to leave his link right here. If you want to deep dive, or if you want to really go into things a little bit further with him, his link will be on the screen there. And as well as ours, Amanda's going to put our link in the chat there. And for anybody that's watching this video on YouTube after the live recording, we're going to drop both of these discovery links directly into our calendars in the video description. Okay, thanks a lot, everybody, for coming out. We really appreciate it. And we look forward to seeing you in our next educational seminar.